What's up traders, welcome to Failure to Displace. In this video we're going to take a look at the London session Silver Bullet hour and see what opportunities there were for us to grab some profits. So I've marked out our key levels of liquidity on the 15-minute time frame that we will be looking at. Starting left to right, we can see we've got highs from the London session and the New York session on Wednesday that have currently been untapped. We also have the New York session high yesterday, which is our previous day high as well. London has pushed up this morning, but we failed to take the high, so we've got relative equal highs here now, which is a nice draw on liquidity. From a sell side point of view, we've got the Asia low, which has just been taken and we're closing back inside that range at the moment. We have the New York PM session low, which has been untapped. We have relative equal lows here on the 15-minute time frame in the gap between the New York AM and PM session. We also have relative equal lows here within a 15-minute fair value gap. So this is quite an interesting area. I've highlighted the fair value gap with my Gann box so I can see that the equilibrium of this and if it gets respected or not should price get down this low. And then we have yesterday's low as well, right at the very bottom, put in the New York session. So those are my key areas that I want to be looking at during this session. Now trading this, I'm updating how I'm going to trade the Silver Bullet hour. I'm going to start implementing my failure to displace 1-minute scalping strategy. If you're not quite sure what that is, I released a video a couple of days ago. You can click the pop out above or the link in the description to review the video. I am going to make some key changes, however, to how I'm trading this strategy because I do find that I was getting a lot of false entries. So the way I'm trading this moving forward is, first of all, I'm actually only going to be trading starting from the Silver Bullet hour, because I'm not able to get to the computer within the first hour. So it's really no point in me trying to review this because I can't get to the computer that early. So I'm looking at this from 3 AM onwards is when I will be taking trades. I will also only be taking trades at the extreme of the session, which means I'm not going to be taking 1-minute scalp entries inside in all of this chop. I'm going to be looking for price to be sweeping liquidity at the high or the low of the session and then closing back within the range before I take my entry. For those of you that are not familiar with what the entry criteria are going to be, I'll give you a quick breakdown now. We've got two entry models. Essentially, this is the first entry model, which means that price has swept liquidity. Our liquidity here is the Asia low that we marked out. Swept liquidity on one candle. The following candle has closed back inside the range. Our entry at this point would be taking a long position as soon as that candle closes back in the range. So you're going to be entering at market. Your stop loss will go below the low of the candle, the swing low of the candle that's closed back in the range, or a minimum of 1.5 pips. So this is 2.3 pips, so we're okay in there. We will then have a first take profit at 1-to-1, which will take us risk free. So as price hits our 1-to-1 target, we will take 50% of the trade off, leaving only 50% remaining. Should price then come back to hit our stop loss, it's a break-even trade. The 50% profit that we've taken up here cancels out the 50% loss that we will take should we get stopped out. So this makes us risk-free really quickly, but we're not having to pull our stop losses up and take the chance of just getting stopped out break-even and having no chance to take profits further up. So that's our risk profile. Entry number 1 would be one candle closes outside of the range, second candle closes in. Entry number 2 would be a candle that takes liquidity and then closes back in the range. So just as an example, say we had liquidity up here, this would be entry model number 2, where a wick takes the liquidity and then it closes back in the range. You would enter as soon as the candle closes in the range. Again, stop loss above the high or 1.5 pips, whichever was the largest. Risk-free at 1-to-1, taking 50% off and then targeting further liquidity. So there's our two entry models. Either a wick and closure back into the range or the following candle closing back in the range. So there was an entry here before the Silver Bullet hour opened up, but obviously I haven't traded that. Let's just see how this plays out as we move into the session. So this would have been a break-even trade. What we have done though is we have swept liquidity at the extreme of the session now. We did have a swing low here, which has been swept. So this first candle has not closed back into the range at the moment, so it could continue displacing lower, pulling us away from the Asian session. So the following candle actually closes back into the range. So this now could be classed as a failure to displace. We've taken the low, we've closed back in the range. This would be a long trade as soon as that candle closes. Stop loss would be below the low, and you would be targeting 1-to-1 for your first take profit. Let's see how this plays out. So we're in the trade. So you more or less instantly hit at 1-to-1. 50% of the trade is off. We're now back inside the Asia range as well. So you could target your first pool of liquidity, which would be this swing high here, which is only a 1.6R, so it's not particularly great. Or you could target higher levels of liquidity here. So we've got an order block in the middle of here. We've got relative swing highs here, which we could target. One thing that'd be worth noting is pulling a fib from high to low to find out where your premium and discount area is within the session. So generally you want to be buying in a discount, you want to be selling in a premium. And we can see that actually we've got this order block, this resistance here as well, so like a breaker block here, and this order block at the 50% level. So you may want to take profit at 50% because that's when we're going to be going to a premium, and then look to take further profits should price continue up. So let's see how this plays out. As it stands now, we're just risk free, stop loss is still below the low, and we're just going to watch this play out. Left a nice big fair value gap there, so we'll come into the premium area. We've rejected bang off 50%, so that's interesting to see, respecting that 50% and respecting the order block. Come closed and rejected back under 50% again. So if you were watching these candles, that might be something just to be aware of, the way it's respecting the 50%. Pulling away. And then definitely I would be looking at this thinking we might be having a reversal here, because this here is a balanced price range. Which if you've watched any of my previous videos, you know I love balanced price ranges. We've had a bullish fair value gap created, followed directly by a bearish fair value gap. So where the two overlap is a balanced price range. When price hits balanced price ranges, you usually get quite a strong reaction. So this could suggest that price is coming deeper now. So if I hadn't taken profits here, I would definitely be looking to try and close out or secure some more profits before price comes back to entry. Price is tanking down quite hard now. We're into this fair value gap. One thing that I would like to point out here is we've closed below 50% of that fair value gap. So again, I'd like to see 50% levels respected. This fair value gap has not been respected. It's closed below the 50% level, and then this candle is actually respecting 50% now. This is telling me that this could potentially be resistance. So if you didn't get out when you saw the balanced price range, if you're seeing this potentially flip to resistance, this could be an area where you think, well, I'm just going to take this, take my stop to break even here and just secure that 50%. Or you could just carry on, not overmanage the trade, because I do tend to overmanage my trades, and just leave it to hit stop loss if it comes down that far. We've pulled back. We've hit the balanced price range. We've respected the 50% of that balanced price range as well. So you really got to be watching what's happening at this point. Respecting the 50% of the balanced price range, which is really interesting to see. Come through, we've closed through this fair value gap again. We are back at entry. Leaving fair value gaps coming down. And we've swept the low. So we've got a new session low now. We've taken that low. We've not closed back into the range. So there's no entry here to go long. So you would either secured some profits here or you would have been stopped out break even if you were targeting higher up. There was a potential 3R there quite easily. Okay, so again, nice strong reaction at this level, so we will officially mark that as a failure to displace. We've broken the low. The following candle has engulfed, so this is a really good sign, and closed back inside the range. Let's clean up these. So this is a long close of that candle. Stop loss below the low, 3.6 pip stop loss, 1-to-1. We will take 50% off. So we're in the trade. And we've taken our 50% off here. So we've just whipped through. So we are risk free now. Stop loss is still below the low, so we're not touching the stop loss at the moment. Targeting. I would be targeting these equal highs here inside this balanced price range, 2.17R. So I'll definitely be taking a chunk of the trade off at that level. Again, watching this, we've had a fair value gap, we're closing through it, we've left the fair value gap here. Pulling away. Leaving another fair value gap here, so we're still risk free at the moment. So it's respected the 50% of that fair value gap. Wicked away from it. So again, this is another one of discretion how you manage this. Would you just close out as it came back to break even, because it looks like it's respecting bearish fair value gaps now. It's up to you how you manage it, or do you just leave yourself risk free and just see if the price just stops you out. Okay, so we stopped out there. So we've had a 3R trade and a break even trade at the moment, so it's not taken that liquidity. But it did come and it did touch the very bottom of that balanced price range. So if you were kind of on the ball, you could have secured a 1.9 trade there, or a risk-free trade. So again, how you manage the trades and how you look at how price is reacting at these levels that we're marking out would be critical. So we've taken this low there, so we want to see a good closure back inside the range if we're going to take a long position on this next candle. I wouldn't say that's a good closure back inside the range. That's at the bottom of the range, so that isn't a long position. We're very, very close to taking this liquidity just below us as well, so I wouldn't want to take a long position at this point. It's not closed within the range. Let's move forward. So we have got a strong candle here, but it's not closed back inside that area of liquidity that we'd already marked out. So there's no long position here. We did have a swing low. We've closed back inside the range on this swing here. So we've taken this, we've closed back in the range there, so that is a potential long position with a 2 pip stop loss. That's quite nice, 2 pip stop loss, so we'll be going 2 pips for our 1-to-1. This is where you need to be really quick when you're trying to trade these live. And that's a loss, is that one? So this is my three trade rule. I would be out. So I've had a 3R, potentially a 2R at this point, or a break even. Third trade would be a loss. Let's carry on and see what we get offered. So we've taken that there, that's not an entry. Got a new lower here. We are outside the Silver Bullet hour now, I should mention. I will be looking to trade this up until 10, well 5 in the morning, the end of the London session. Okay, so that there is a sweep of liquidity, a closure back into the range. So we've got another entry just here. Let's take it off there. The stop loss will be below the low. So let's just mark this out. This is our failure to displace. Just mark that as a failure to displace as well. So that is our failure to displace there, which didn't get us our 2 pips. This is the next one. So we've taken the session low, we've closed back in the range in the same candle actually. So it's followed it through, which means that that would have been the entry just there with a 1.5 pip stop minimum. So this following candle almost stopped you out, but it didn't stop you out. And then you would be looking at 1.5 to go break even. Okay, so you smashed your break even. Potential take profit 3R, the top of there, so take another 3R off. We are now closing back in with some bullish price action. So this is the trade that you could potentially be leaving to run. If we look at our fib, I can find the, we want to be closing out at around 50%. We can take up to 50, which gives us a 10R trade, which is just into this kind of fair value gap area. So we've got a swing high just above it. The liquidity, you've got your 618 just above there. So the 618 is the optimal trade entry, so we'll potentially get a retracement back up to optimal trade entry. Let's see how this plays out. There's no real liquidity to be taken in here, to be fair. This is just ramped down, so your next serious liquidity level is going to be above these swing highs. So it's dragging on. You would be so happy with this though, because of the 1.5 pip you've got at the very bottom of the session. It's tapped 50% and rejected straight away off the 50%. It's not taken the liquidity yet, higher up. Be worried there as it had that big pullback. This is where you may want to walk away from the screen and let it play out. Eventually getting the 13 that we mentioned into optimal trade entry. So killer trade. You can see these failures to displace at the session lows work really well. Get yourself risk free as quickly as possible and then target the opposing liquidity. So that could have been a killer session this morning for anybody trading that style. So that's the Silver Bullet session with the failure to displace 1 minute scalping strategy and the possible entries that you could have taken using that system. Hope you found it useful. It's really good me reviewing that. This is something that I am going to be forward testing from now on just to see how it plays out. Because it does seem to be very profitable, and I really like that entry criteria of the failure to displace, closure back in the range. If you like the video, give it a thumbs up. If you have any questions, please leave them in the comments section down below. And likewise, please feel free to subscribe to the channel if you want to see more content like this one. Thanks again guys, and I'll see you in the New York session with a review of Silver Bullet New York.